Okay. Hey guys. Again, my name is Mr. E. It's a pleasure to be here with you guys. It's been a while. Welcome to the MMC University. Today I decided to make a video for you guys because it's been a little bit of time before I post some video. If you don't have your water, as always, get your water and do not forget to let us know how you doing on your study and let us know when you pass the exam. Okay, we will really appreciate that, and this is what gonna be able to encourage us to continue to produce those videos. So today we're gonna be talking about something different. We're gonna be talking about with you guys today is what we call this. There's some stuff that's very like synonyms. Okay, or they mean the same thing. They have the same meaning. Is another way to say something. But while I'm going to this, don't forget to still follow your own state guideline, and so you can study to get the right words in your state because every state is different. Okay, so I want to make sure you guys understand. The first word that we're gonna explain to you today is accumulate. Accumulate mean is to build up. Okay, is to add, mount up. So when you're accumulating something, you build it up. So this is some of the term that you're gonna see on your exam. Accumulate. Okay, especially in chapter 3, you're gonna call in chapter 2, excuse me, when he talks about annuities. Okay, when the cash values build up also. So you have to understand, accumulate mean build up. Okay. Another term, another word you have to understand is adjustable. Able to adjust. Okay. So that's mean you're able to change it. That's mean it's not fixed. It's flexible. It's changeable. So you can see there's different words they can use in the exam in order for you to get confused. So, so they can make the question very difficult. So you understand adjustable, not fixed. Adverse mean something bad. Okay, is unfavorable. It's opposing. So that's where you have to understand adverse. Adverse selection. When you apply for a credit card, they take an adverse action, meaning that they'll let you know if you get approved or not. Okay. So if you don't get approved, that's mean it's a bad thing because everybody hope to get approved. But if you don't get approved, so that's mean you get an adverse action. So you have a bad you know a bad I'd say not a bad report, but it's a bad news. It's a bad news. It's an adverse action. You also have to understand the word annuitization. Okay, if I don't want to say annuitization, I can say the benefit period or the payout period. And this is where you're talking about the annuity. I'm gonna annuitization my annuity. So it's time for me to start collecting my money. Okay. Assign. So when you see the word assign, so that's the keyword assignment transfer. So on the test, if you find any assign, you have to know it's transfer, and you're gonna also find that in chapter 3 when you talk about assignment. Okay, there's absolute assignment and there's collateral assignment. We language mean the same thing, to give up ownership. So that's what assignment. So when you assign your ownership to someone, that's when you give up your ownership right to somebody else. So there's two type of assignment: collateral assignment and absolute. So a collateral, you use it for a debt. When you owe somebody, you're gonna use it as a collateral. So when you pay the person off, you still own the policy, but partial. And absolute assignment is when you transfer full ownership to someone else. So that's when you give up your full ownership. Assignment transfer. All right. So we're gonna continue to the next slide. We're gonna talk about what we call attain age. You got to understand attain age mean is the age that you have. You reach a certain age. That's the age that you get the policy. So let's say right now today, if I am like let's say 25 years old, I get this policy. So I attain age, it would be 25. So I got 25. So attain age is your current age. Okay. We call avocation. Okay. or if you want to say avocation, but avocation, right? So again, I'll say this is not a spelling class, okay, or a pronunciation class. So you see it in front of you. That's why I put it in there so you can see it, right? So it's been hobby, it been profession, it's the job, okay. So that's what that word mean. So concealment is just like when you conceal something, cover up, okay, it's to hide something, okay. When you hide something, you tell the truth but you don't tell the whole truth, okay. Concealment, sometimes people getting a policy but they do some concealment, they tell the truth but they cover some up. Conditional is another word, so also don't confuse conditional with what we call consideration. So it's two different words. Conditional mean certain condition must be met. If, so when you see conditional, if this happen, this will happen. So that's a condition. So if this don't happen, this will not happen. Okay. So certain condition is restricted. So um, contingent is another word for next. Okay. If I say contingent, I can say next or next in line. It's a backup. So this is where you're gonna find that when you're putting your beneficiary, you can have a primary beneficiary, okay, first person in line to get the money, the death benefits, and you can also put a contingent beneficiary, meaning the second person to get the money. It's a contingent next in line. So you're gonna have it. There's a word called convertible, and you're gonna find this is a feature in term policies when something is convertible. Also, you can find it in adjustable life insurance. So convertible means able to convert, changeable, is exchangeable. So that's when I can convert, okay, to a whole life without proof of insurability. Convertible. So if I have a car that's convert, so that's mean the tap can open up and then it's not a transformer, you know what I'm saying? It's not a transformer, but it's convertible. Convertible. It's mean able to convert, able to change. Okay. You find this more on a on term policy. Is a feature of a term policy. You can convert to a whole life. Or from a group, you can convert from a group to an individual policy. Or from an adjustable, you can convert that also. You have that where you can convert from a term to a whole life to a whole life to a term. So you know what the word convertible means. Cash value. Cash value, this is another word you have to know. Cash value, it's the living benefit. This is the policy savings element. This is what the money that's saving inside a whole life policy. Don't forget, term insurance do not have cash value, so you're only gonna find a cash value into a whole life. And so a whole life, also cash value is another name for a whole life or permanent. So cash value, know that. Creditor. A creditor is somebody who lend money. So when you go to a bank, you borrow money. The bank is the creditor. You are the you'll be the borrower. So if I don't want to say creditor, I can say lender. So on the test, you can see the word creditor and lender. So don't forget when they talk about insurable interest. So is the creditor or the lender that have insurable interest on the debtor or the borrower. Okay. So remember that's why you're learning this word here. Death benefits. Oh my God. This one, it's crazy. So there's so many ways they can say the death benefit. Okay. If I don't want to say the death benefit, which is that's the money, that's not the cash value, okay? That's not the dividend either. That's the money that the beneficiary going to receive. That's the big cash, the big lump sum. Okay. The big, like if somebody buy a policy for 100,000, the death benefit is 100,000. That's what we're talking about. That's the whole amount. So the death benefits, if I don't want to say death benefits, I can say the face amount. I can say the face value, the policy proceeds. I can say coverage. I can say stated amount, indemnity amount, or proceeds to the beneficiary. So there's different terminology they can use when it comes to the death benefits. So they can use any of those words in the exam. Okay, so you know. Earlier I did talk to you about the lender, the debt. The creditor. Now we're gonna talk about the debtor. The debtor is somebody that's borrow money. So now the creditor have and show interest on the debtor. So if you borrow money, let's say you borrow $10,000 at the bank, so you're the one that the borrower. So that's mean the lender having show interest on you. So if you die, you're gonna die with the $10,000. So therefore, the lender can put an insurance on you. Okay, so that's why you're learning this word also. Deferred. Deferred is another word we can use later. Deferred means later. Put off until later. So that's mean you don't have to do it now, but you're gonna do it later. The reason you also learn this word because in annuity is something that go tax deferred. Also, the cash value go tax deferred. The retirement plans they go tax deferred. So that's when you don't pay the taxes today, you don't pay the taxes now, but you're gonna pay the taxes in a future time, later time. Okay. Define means specify. That's easy, straightforward, but define means specify. So sometimes they might actually a test question define consideration, define underwriting. So underwriting is the process of selection, classification, weighting of risk. That's what that means, define. Because the reason you have to know that because on the test, they can simply start a question just like that. Disclosure. Disclosure is to tell. Okay. Disclosure, you can see a piece of paper that have information to disclose, like a buyer's guide. Okay. Disclosure is to tell. Now, disclosure is to tell. Look, I have this word twice. So let's go to the next page. Equity. Equity. Okay. Equity means stock. Okay. When you see the word equity, they refer to stock, ownership, or also it belongs to you. So this company that's is a stock company. So that's mean they have equity. That's mean they issue stock. They have ownership. So when you buy stock, it's a piece of ownership. So you have to know the difference between mutual company and a stock company. So when you see stock company, so there's shareholders. If I don't say shareholders, I can say investors. Okay. Hopefully, I get to explain that synonyms also. I hope so. Estate. Estate is or if say state or estate, whatever how you want to pronounce estate, is owner's property or an item before somebody pass away. So that's why when somebody passes away, when you have a life insurance, it created an immediate estate. So that's mean if you die right now, you're gonna leave a lump sum of money to your beneficiary. So that's why when somebody passes away, I'm not gonna say it's the government or the state I would say, they create a estate account for all that person wealth to go in that account until they can figure out who the beneficiary going to be. Okay. Exclusion. Inclusion mean is included. Exclusion mean not included. So not cover. To leave out. So there's things that's not covered into a life insurance. For example, war, dangerous activity. Okay. So there's things that's not covered. Suicide is not covered for 2 years, usually 2 years, but it's covered thereafter. So that's means suicide not covered is an exclusion. War is an exclusion. Aviation, somebody who's is a pilot or that's working as a flight attendant, they're not covered because they are excluded from cover into a regular life insurance. They have insurance, but not on a regular basis. So that's an exclusion. Fiduciary or fiduciary or fiduciary. Okay, however you want to say that word, fiduciary, fiduciary. Okay, so it's a position of a financial trust. So they put you in a position as a financial trust. That's when you're handling money for someone else. You're handling money for the insurance company. So when client give you the money, the premium, So you're handling the money for the insurance company, so you can't steal that money. That's why you're supposed to have a separate account, so you don't deposit insurance money into your own. You don't no commingle, so you don't mix them. So when you're working for an insurance company, the insurance company put you as a fiduciary as in a trust capacity. So when they send you the check, if a client passes away, they send you the check to deliver to the client. You don't steal the money. You don't forge this check to put in your bank account, and then that's stealing people's money. So because they put you in a trust capacity, okay, there's big violation for doing that. So no commingle. So that's why you are a fiduciary. They put you in a trust capacity, so handling insurance money the way you're supposed to. Do not mix them with your own personal money. And the last one we're gonna talk about into this video, it's what we call fluctuating. So some stuff goes up and down. That's mean it's it's changing. So it doesn't stay stable, it doesn't stay fixed. So it change, goes up or down, fluctuating. So it doesn't stay in the same level. So I hope those synonyms help you and be able to pick up a couple points in the exam in case you find a term that you did not understand. So don't forget to watch the next video for more definition. And at the same time, if you have no company that you work for, guys, usually I don't do that. But if you wanted to get some information about what we do, the company where I work, you want to be part of it, you want to be part of our team, so you can see there's a QR code here. You can scan that QR code, you can fill out the form, or you can type this URL, okay, if you're not join our team. So I really appreciate you all for watching this video. If you like it, give it a thumbs up, and don't forget to comment and share it to someone that probably interested. All right, I see you on the next video.